In this video, we're going to talk about all the advantages of setting up a personal 401k for a small business person and how it can work wonders for your retirement. Coming up next. Hi everybody, my name is Dee Burks and this is Retirement Rescue, where we talk about how to make money, save money, and live well in retirement. Well, today I'm talking all about setting up a personal 401k. I'll talk about what it is, how it works, and everything you need to know to make it work for you. Now, the reason I'm talking about a personal 401k is it's one of the tools that I'm going to be using. So realize what I'm telling you in this video is what I'm doing. This is not your personal financial advice. It's entertainment only. Please check with your own tax advisor and financial advisor before doing anything that I talk about in this video. Now, when you look at setting up a tax-advantaged or qualified retirement account, and let's talk about what that means. That means it is an account that you can put money into pre-tax, and that account grows for retirement. The account is really just a box. I learned years ago when I was a financial advisor, an older financial advisor, used that example. He said, tell people it's a box. Everything you put in that box goes by the rules of the box. And so if you put in stocks, bonds, mutual funds, CDs, anything you put in that box, investment-wise, has to go by those rules. Well, in a qualified retirement account, every one of those types of accounts, 401k, IRA, Roth IRA, whatever it is, has its own little set of rules. Now let's talk about the benefits of a personal 401k. The first benefit, of course, is it allows you to contribute pre-tax. In other words, it lowers your taxable income, the amount of money you have to pay taxes on every year, by a significant amount. That's a huge plus, especially for a small business owner that doesn't have access to a corporate 401k. The second benefit is it's very self-directed. You can put any investment in it that you want, and you decide what that investment is. You can change the investments, you can trade them out, you can swap them, you can do a whole mix of investments within the same account, just like you can with a big corporate 401k, but when you direct it, depending on who it's set up with, a lot of times you have a lot more options than you do with a big 401k. Those big 401ks tend to be somewhat limited. The third advantage is your contributions are elective. So if you have a great year, you can max it out. For example, this year, 2020, the maximum amount you can contribute, the maximum amount of income you can defer is $19,000. My pupper has an itch, sorry. Is $19,500. Now, because I'm over 50, I can also use what's called a catch-up contribution. The IRS allows people over 50 to put in an additional amount, defer an additional amount of income. This year it's $6,500. So the total that I personally can put into this account, if I have a good year, is $26,000. As my own employer, I can contribute up to 25% of my income as the employer contribution to a maximum amount of $31,000. That means if I have a good year, I can contribute as much as $57,000 in 1 year into my personal 401k. And that is much more generous than the other types of accounts that you can contribute to on a pre-tax basis. That's why I chose it personally. Now, the fifth advantage of having a personal 401k is it works like any other 401k as far as you being able to take out a loan or anything of that nature. Your plan document allows for that. And this year, with the stimulus, that's up to $100,000 of the account value. Now, that will probably go back to the regular $50,000 before long, but should something happen and you need a loan on your 401k, It works just like a big corporate one. You can take a loan on it. So that's not an issue. And the last advantage, number 6, is it's really easy to administer. These big companies like Schwab, Vanguard, TD Ameritrade, all of those companies have the option for you to set one of these up with them. They already have the plan documents done. They send them to you. You fill out the minimal information, send it back, you're good to go. And most of those big companies don't charge you anything, so it's free. Now, there may be a fee if you wire transfer something or, do something out of the ordinary, but just having the account, funding the account, doing the investments, that's free. And there's no tax reporting on those accounts until the account value gets over $250,000. And even when it gets to that stage, there's only a one-page form you have to file, so it's not a big deal. Now, when I went to set mine up, there were a few caveats, and those are things that are really important to understand if this is something you want to look into. Now, the first important thing to understand is that in order for you to contribute for this tax year, let's say 2020, your account has to be set up before the end of this year, December 31st. So you want to get that paperwork going prior to that if you plan to contribute. Now, what I plan to do, and this is what a lot of small businesses do, is they set the account up and they go ahead and fund their employee contribution. They know what that's going to be. They can fund that amount. But then they wait until the end of the year and they get their taxes done, and you have until April the 15th to contribute your employer amount, because that takes some calculation. There is a formula to use, and I'm not a mathy person, so that's one of those things you really kind of want to have a tax person to do. But once you get your taxes all done and you figure out what the amount is, what the amount that you want to contribute is, then you can do that after the end of the year. But the account has to already be set up. This is not one of those deals where you can wait until April the 15th, set the account up, and fund it for the previous year. Can't do that. Now, you can put in contributions for that tax year up until the next April the 15th, but you really have to have that account set up. The second big thing that's important to understand is when you have a small 401k and you're using it to fund your retirement, if you hire any employees and they qualify, they're more than part-time, they're not just people you 1099, they're actually statutory employees, that plan applies to them too. And so whether they contribute or not, they would have the option to contribute. Whether they contribute or not, if you want to have an employer match, which is basically a profit sharing match, and let's say you want to match yours up to 25%, you also have to match their salary up to 25% and put it in for them. That's a big deal. So when I looked at my companies, and I have 2 companies, and the reason I set up 2 was, one of them is the media company, publishing, media, YouTube, and all of that goes into one company. I know I'll get most of my income from that company, and I know that company is highly unlikely to ever have employees. Anything I need done, if I need an editor, I just hire one and 1099 them. The other company, also an LLC, is for my online retail business. I plan to be setting up a Shopify store and using that. Now, I can see, especially if we get really busy at the end of the year with Christmas, with the holidays, I might need to hire some people. I might need to hire some help to deal with customer service. I might need to hire some help to pack and ship and get everything out in time for the holidays. I don't want to have to contribute to a retirement plan for employees. If you have a retirement plan and you are handling money for those employees in that retirement plan, most of the time you have to have a fiduciary bond. You have to go out and get a bond. You can add it to your business insurance, but it's an additional thing. I don't want to deal with handling money for employees. I just want to deal with handling money for me. So I chose to set my 401k up under the company that I am almost 100% sure will never have an employee. For that reason, I want it to be simple. Now, you need to go to your tax advisor and see what's going to work for you. In my case, this is going to get me to my goals faster. I need to accumulate money And doing so on a tax-deferred basis helps me pay less taxes, make money using Uncle Sam's money, and put more money away than I could through other avenues. That's why I'm choosing it. But you need to do you. Now, if you like these videos, please click the subscribe button, give me a thumbs up, and I'll see you next time.